solution, and then our third platform called our developer funding solutions for the 35 biggest and best retailers in the country today. So all continental United States. Our top tenant is Walmart. We have over 2,000 properties. We focus on, again, the largest retailers in the retail universe today that have, we think, the balance sheet, the wherewithal to invest in really three primary factors. One is omni-channel distribution, labor, and price. As you look at our portfolio today, it's approaching about 70% investment grade, perspective of those 35 top tenants. And it's really a who's who where we invest capital in the retail landscape. Sure. So my father actually was a Kmart developer who took the company public with 16 community anchored centers, all anchored by Kmart in 1994. Since 1994, we haven't developed any shopping centers. That transitioned to the development of Borders bookstores, which was based at our backyard. Many of you may remember Borders. And then Walgreens came out with their freestanding prototype in the early 2000s. And the company developed a number of Walgreens stores throughout the country. And then in 2010, I launched our acquisition platform, which has really propelled our growth. At that time in 2010, the portfolio, the entire company's portfolio was 72 properties in 16 states, 75% of which was Walgreens, Borders, and Kmart in terms of annualized base rents. Today, we have 2,100 properties across 49 states. Great question. I think we have a number of trends impacting the sector. Now, number one is convenience orientation, the ability to fulfill. There's a number of white papers on our website that talk about these trends. We just released one in terms of off-price retail just this week. But today it's about convenience, about being competitive in terms of price, distribution. Omni-channel is here to stay. We believe that 25% of goods sold in this country are going to come from an omni-channel permutation of some sort. Now, whether that's buy and deliver to your house or buy online and pick up in store, micro-fulfillment, macro-fulfillment, all these different modalities, what we're seeing is brick and mortar being a linchpin to the omni-channel future. We have white papers on Amazon versus Walmart and their different approaches, and Kroger versus Walmart on the website. And I encourage everybody to go to realty.com and see our ADC knowledge base with a lot of information there. My 18-month-old dog keeps me up at night. I'll tell you, we don't control the macro here. This portfolio, we firmly believe, is the best retail portfolio in the country. With a balance sheet underlying it that's a fortress, led by Walmart as our top tenant. Again, approaching 70% investment grade, 11.5% ground leases. We have no material debt maturities until 2028. The dividend is growing at a compounded 6% annual return, and is extremely well covered. And so I'll tell you, there's nothing within the four corners of this building that keep me up at night. We don't control the macro. That's why we keep our balance sheet pristine. We have no variable rate exposure. And so we control what we control. And right now we're focused on being disciplined in a very volatile environment. I think everyone's aware, and then truly operational excellence across all areas of our business. The net lease sector has lots of different types of companies that focus in different, and I'll tell you, different areas, both sectors, geographically, tenant credit-wise, different transactional structures, sale leaseback originators. What sets us apart fundamentally is we're a real estate company. I grew up on a site literally driving a bulldozer. And at the end of the day, we're focused on high quality real estate transactions that provide for appropriate risk-adjusted returns to drive earnings growth and dividend growth at the end of the day. And so you won't see us invest in single-purpose buildings like car washes or Topgolfs or experiential concepts like pickleball or anything luxury or discretionary. We believe in rectangles. We believe in highly fungible boxes here, and we underwrite from the ground up. Rents per square foot, retail synergy, demographics, the residual value of the real estate. The art of being a net lease investor, we believe here, is comparing the terminal value of the real estate, which is the residual, relative to where the comparable bonds trade. And so that's really our focus here. So at the end of the day, we're dirt guys.